Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I will be your host. So today we have with us Janet Fields. Hey, Janet.
Hey, how are you doing today? Thanks for having me.
Glad to have you joining us. So Janet, why don't you tell us a little bit about your background to get started here?
Sure. So Janet Fields, I am native of Charleston, South Carolina, more specifically Summerville, South Carolina. I grew up around real estate, but that was not my first love. I actually fell into it. So originally growing up, I wanted to be a artist. And then I realized my parents didn't want to invest in that. So I went to college for a bit and couldn't write a paper to save my life for the longest time. I have dyslexia and ADHD. Those are some interesting things for language, some big hurdles there. So I was a government contractor for about 5 years, and it's a really technical job. I enjoyed that, learned some AutoCAD stuff there. Kind of capped out after 5 years in that industry, realized you couldn't really go too much further, and it's not a very stable job. It's usually 5 years is like a gift if you get 5 years. So I talked to my dad, who had his own real estate company, who had been managing his own properties and started portfolio, started acquiring other companies. And he was like, "Yeah, I'd love for you to join the business." I never thought any of my daughters would. I'm the youngest of three girls. And he cried, I cried. It was amazing. And then I stepped out of there for a few months while I had my second child. And when I came back, we had started an acquisition, and I took that on as my own. And a couple years later, we took on another acquisition and became business partners. And I actually just bought him out recently. So sole owner of the company, and we manage about 500 single family homes in the Charleston area, which is it's pretty big beast to take care of with such a small team and it's a small footprint, but we learn a lot. It's a lot of fun. It's really interesting. The stories honestly are what keep it entertaining, and the people. But I love to be efficient and just try to get things done as quickly as possible to save everybody money and time, because those are two things that I just find extremely valuable. So I found myself here accidentally. Nobody dreams about being a property manager. It just happens.
Nice. Well, that's a good story. So I want to kind of dive right in because we work with a lot of real estate investors, and I hear the same thing on and on and on. Like they hate their property management company. I've never heard anybody say, "Wow, I love my property management company." So to walk us through kind of what some of those issues are that you hear from the industry, and where, how people should understand that it's not just, hey, you just hire somebody and you just walk away.
Yeah. So one of the things that I see with new investors is, or just, smaller investors that are working through the process, they are actually looking for a personal assistant. They want somebody who will answer to them, instead of a company who has trialed and errors, has court tested their documents, and is keeping them out of the liability and choosing their landlord or choosing their residents. A lot of investors that we have that are smaller, or that we speak to, they want to approve their own residents and have a say on who goes into these properties, and that's not really functional as an investor. If you know all the nuts and bolts, like, you're really getting lost in the weeds. Like, you just got to trust this person to do their job. But I can totally understand if you're not finding like somebody qualified, that you can't trust them to do that job. And unfortunately, property management has been a mom and pop company or industry for decades. It's slowly starting to grow. The market is completely fractionalized. There's starting to be bigger players in the market who are buying up property management companies, and have thousands upon thousands of properties and are trying to go nationwide. So it's more of like a Regis, or like the gyms where you can go to any gym at any place and move your leases. So that because the market's coming together, we are becoming more professional. There are standards and benchmarks finally, which is really opened everybody's eyes, and people are starting to rise to the occasion. So I hope that everybody can find a licensed property manager in the future. They're out there. You just got to hop on Google. It probably is a little bit harder to find property managers to do apartments than it is single family homes, just because of the beast and how we work. But a lot of the pitfalls I find is investors wanting to be really hands-on in each action of the property. Like they want to know who's going to move into it. They want to adjust the pricing. They don't want to make repairs, and or they nitpick it. That's really hard. The really great people that we have, they say, okay, they ask us about our lease, they review the lease, they review the management agreement, they figure out the numbers, they build the annual equation of what it looks like, and then they move forward. Some people think we're nickeling and diming them because of every action item we have. We get a fee. My favorite question is, well, what do you do for the management fee? And recently I went to a conference and realized that maybe we should have named it something different. Maybe it should have been commission, because that's what it is. It's commission for getting somebody in that property and commission for collecting the rent. But then when we have maintenance repairs, like those are heavy hours, like those are 12 touches on a property. And we have to keep the relationship up. So it is hard to find a good manager.
Yeah, I mean, from what I've seen, or at least from clients and other investors, there's a lot of real estate agents out there that claim to be property management people, so that basically they can just rent the property out, and there's not a lot of incentive for them to do much other than just getting a new renter, and oh, this one left, let's get you another one.
Yes.
So what have you seen with that, and what are kind of the drawbacks of using a realtor as your property manager?
Yeah. So they're trying to check too many boxes is what's happening. So if you work for commission or you work in sales, it's like a really big carrot, so they're always looking for that big sale. Property management, we have a big front end piece where we get the resident in place and we occupy the unit. And then it's a little easier for along the ways, but we have to manage a 12-month relationship. And anecdotally, I feel that real estate agents get bored along the way and they forget to keep in contact and do the repairs and keep an open line of communication with the residents, so you know what's happening at the home. A lot of people overlook having a relationship with the tenant is valuable, because when they get water damage and they don't feel like anybody's responsive, that water damage turns into thousands of dollars. It turns into mold and mildew and rot, and it just goes down that hill from there. And they're just answering those calls that are right away and need to be done. And we work monthly, and it seems they work monthly to annually, and it seems like they work on a shorter time frame and kind of drop the ball because just the way that they work and their focus.
Yeah, I mean, it makes sense. If they're realtors, they're selling houses, finding renters, they're not managing properties.
Yeah.
Or they're just picking up the phone and addressing things. But you're right, it's not as proactive from what I've seen. Now, when you say standards and benchmarks, I mean, from what I've seen, there's a lot of investors just end up doing their own property management because they just don't trust anybody. I mean, that's the vast majority of people I've talked to. They're like, I just do it myself. I don't trust anybody to do it. I haven't been able to find anybody good. So, what would you say to people like that are kind of do it themselves?
Well, I would say, maybe look at your growth at that point. Has your growth plateaued? Because a lot of times when your growth plateaus, it's because you're controlling too much and you haven't shedded your responsibility so you can raise up to a higher value. So that's what I would ask is, are you growing or are you bogged down? And then who can you bring in to help, free you up so you can make smarter choices with your money to make it more powerful for you. And that's what we do, is we focus on the property management so they can take their mind out of that and focus on their next opportunities to take with this money.
Okay. So now do you said you manage like 500 single family homes. Are some of those yours, or you just do it for other people?
I do it for other people. My cash options have just opened up a lot more, so I will be investing. And I will invest in this market. There's no reason to wait. The interest rates could probably just go up, so hop in now, right?
Well, there's a question for you. I mean, since you see this all the time, interest rates have gone up a lot, which means it's a lot more expensive to buy a home, which means that the home values probably should be a lot lower than they are. And they're not really dropping. So where do you see things going, and where do you see the opportunities right now?
I see it plateauing out slowly. But the shift that we've had over the past couple of years has been really strange. We had people who would typically be roommates for, until their 30s, decided that they can't handle anymore because we were packed in. And now those people have exited the roommate situation quickly. In my market, we were already 7 to 10 years behind housing. And this has exasperated that. So we're busting at the seams and growth with the housing market, and the demand is still not being met. So if that's happening in other markets, which it is, it's not, the prices of housing just isn't going to come down that much. And there's always going to be people who can go in and get the houses. There's not the houses that are opportunities though. Those smelly houses that are good flip opportunities, those are gone. You're not going to get it. Yeah, I just don't see that the housing price isn't going to come down that much. It might become more annual like we've seen traditionally before 2020, and that would be nice for us to have a little bit more predictable seasons, but I don't see it coming down. What about you?
I guess the way I kind of look at it is, there's multiple inputs here. One is interest rates. It's, the other is home values, and the other is rental rates. So, we've seen, I'm actually speaking at a conference about this, and one of my slides talks about this, which is you basically had the median income in this country in the last 10 12 years has more or less stagnated. Maybe it's up 15%, so maybe 1% a year, but it's mostly in the last few years. You had home prices which were going up until 2020, then they skyrocketed, and then you had interest rates for the 30-year treasury went from 4-5% down to 2%, and now it's at 7.25%. So if you look at the 30-year mortgage at 2% for a $700,000 mortgage, that's $2,500 a month just for your payment. Forget the rest of it, just for the mortgage payment. And right now it's close to 7.5. We'll call it 7.5% mortgage. That's a double. That means you're paying $5,000 a month. But people can't afford $5,000 a month if they're paying $2,500. Yep. So what do? Well, if you own a home, you don't care because you're not going to move, or you just stay. But if you're buying a new home, I can't afford that, so now I got to rent, which means more people are going to be renting, which is why rent prices have gone up and are continuing to at least stay stable. But I think at some point they're going to start to come down because real estate's going to have to. And it gets into this inflation bubble, which is largely due to leverage, which is due to low interest rates. So I think it's going to deflate. And what you're talking about is the interesting factor, which is, availability of inventory. Mm-hmm. And so what I find interesting is how's that all going to work out? I don't know the inventory of each separate area because every part of the country is different, but that has been the one thing that people have leaned on is saying, oh, this is why real estate's never going to go down because of inventory. Yeah, but what if they can't afford it?
Exactly.
So not everybody has to live in the same place. They can move to other parts of the country, and maybe they have to, but I don't know how that all plays out. You can't afford what you can't afford. You can't make money out of thin air.
Yeah, it's been interesting. We've been seeing more holdover tenants because people can't afford the hike in rent in the property they're in. And what's going to happen, I think, is people are going to continue to move further away from the cities into the burbs where it gets cheaper and cheaper. It makes sense that it's going to fall eventually for sure.
Yeah, and I think people point to, well, you don't have to buy a home that expensive; they can buy something cheaper. But yeah, everyone's in the same bucket.
Yes,
everyone is spending what they can afford to spend every month, right? They're hitting certain ratios. It's not like, oh, I'm just going to spend a lot less on this home. Like, no, people have been pushing the limits for the last 10 years, 20 years.
Yeah,
and how much can I own? It's maybe not the best way, but it's what people do.
We grow into our incomes real quick and we push those limits.
Yeah, for better or worse. So, that's how I see it. But of course, real estate peaked in 2005 and didn't crash till 2008. So real estate moves slowly. I don't know if you know that. I can't speak statistics, but what do you think? Like 5% of homeowners roll every given year and change homes? I don't know what the number is, but
well, everybody moves, or not everybody, but there's 5 to 7 years is pretty normal for people to move. 4 to 7, 5 to 7 years. So whatever the math runs out for that, I guess it would be close to 5 to 7 or 4 to 7. Yeah, that sounds about right.
Yeah. So it'll take a few years for the things to shake out. But so I wonder, do you think they're going to be more? Have you started to see an influx of new investors or people? When did that start?
So accidentals, the minute the interest rates started going up, mortgage rates, yes, for sure. People who were going to sell, the buyers disappeared. So they got scared and they're like, well, I'll just hold on to it. But those aren't the intentional investors, they're the accidentals. And they're just holding on to it. And they might be good opportunities for investors to bail them out because they didn't plan on having two houses and being stretched like that.
Yeah. Yeah. There's, we'll see how long that stretches. I guess if you have, it depends on the rentals, right? Do you
Yeah.
see rental rates staying the same, or where do you see those going?
Rental rates are still going up. They're creeping up. Like 100, $200, we're seeing consistently. The price range that we're in, our average is about 1,650. And we have ones all the way up to about 3,000, but yeah, about $200 on that. And that's a lot for, people in that price range month over month.
Yeah. Yeah, I'm wondering if high inflation is going to keep popping that up, or if at some point people just say, "I can't."
Yeah, and start starving. I don't know. It's funny. We're so hungry for everything and all the new things, and we're just consumers. So it'd be really different to see us not consume so quickly and so much.
Yeah, I think it was in the '70s. I forget who it was. I don't know, it was Nixon or somebody. I think it was Nixon, who said everybody needs to stop consuming because the inflation's too high, and they did, and everyone did, and it destroyed consumption. It was. I was just reading about it the other day. It was amazing that we as a country would do that, but I can't even imagine people doing that.
No, we have Amazon. You don't have to have, there's like no friction between buying and self-control. There's like no hurdles. We removed it all. It's just click.
Yeah, I just got a coupon for more money. Oh, I got to go spend it. What am I going to spend it on?
Yeah. You don't even have to think. You don't even, yes, there's no barrier between spending that money these days. It's nice for sales.
Yeah, yeah, no, I would imagine so. Now, are you mainly focused in Charleston, or are you kind of outside of that area as well?
I am in Charleston right now, but I'm looking to grow more in the Southeast. I got my eyes on Western North Carolina and Eastern Tennessee. Having a family, I do want to stay, at least in the beginning, in a nice footprint. I don't want to go over 2 time zones to be flying to check on stuff, like my teams. But I think eventually 10 years, I wouldn't mind being across the United States.
Nice.
Yeah.
So what do you feel like you need in order to do that well?
Boots on the ground is the hardest, well, one of the harder parts of property management. Keeping a team of vendors, that's another hurdle that smaller investors have trouble with, is they'll get a handyman who's not licensed, insured, doesn't have the best craftsmanship, doesn't have the best timekeeping, all those things. So keeping the good vendors, on the books for us and having a few of them and making sure that they're holding to our standards, like our time standards and our cost efficiencies, stuff like that. So boots on the ground, having people to QA turns, stuff like that, do inspections.
What about systems? You feel like
Oh,
that's scalable?
systems are, yes, 100% helpful. I love systems and processes and efficiencies and tracking all that stuff. Without that, you can just be burning time and money and just everybody's losing. So yeah, we definitely like to track all that stuff. We want to have houses turned and occupied at the most 14 days. I don't want to see any more than that. A week is pretty golden. Less than that is, really sweet. Yeah, we track everything, like how many hours is it, well, not hours, we're not down to hours yet, but I want to get there. How many days does everything take? What's our standards? How much do we make on a house? Because we don't always just make what the commission or the management fee is. There's other fees that we're starting to get from residents that helps us lower the cost for investors, taking a less of a management fee, taking less of a leasing fee if we spread our fees across the table more and give some more services to the residents. So that's another benchmark. The benchmarks have been non-existent before the last couple of years, and now we can make, $200 to $300 a door off these properties per month.
So you mentioned charging renters for things instead of the landlord. Can you give me an example of that?
Yes. So we have technology fees. So we recoup some costs from our platforms that we have. So platforms that we have for rent management can cost thousands of dollars. I believe ours is like $8,000 a month. So getting a recoup off of that is really nice. When we have insurance, renter's insurance that we give to the residents, we get an admin fee from that. There's resident benefit packages that some companies sell to the clients or to the resident, but the residents, it's usually like air filters, You get coupons for this. We'll send people out to your house once a month to do this, like do an inspection, but also while they're there, if you would like to pay somebody to change your light bulb, they'll do it. Otherwise you got to wait till it's a punch list, and it makes financial sense for somebody to go out there and do these things. So stuff like that. I think with the more nationwide systems, and the neighborhoods, there's whole rental neighborhoods now, which is crazy and amazing. That's a perfect setup to run it like an apartment. They can have dog washing, they can have grocery delivery, be a whole concierge services, which is what this generation, right now loves and it's used to, is being catered to and pampered. And any white glove service that you can give them, they're gonna just eat it up.
Yeah. No, that's pretty cool. No, I think it'd be an interesting model that all of this really gets kind of pushed down to the renters instead of the landlords at some, maybe not
Yeah,
completely, but
I think it'll work better for the landlords and the residents, or no, the clients for sure, because reducing the cost and us getting the money somewhere else, I think it makes a lot of sense.
so what about incentives? Because I know one of the gripes I've always had with realtors doing it is because their incentive is to just churn. So you find somebody who's going to rent for a year and then, oh, great, I got another commission by renting in another year. But if you have somebody who's going to rent for like 10 years, you're not really benefiting from that as a landlord. So, what are some incentives that can be aligned for everyone's benefit so it's not just one way?
The fees that we get from residents, the shift in our financial models has been huge, because now that's not our big fee anymore. Like, yeah, we'll get a certain percentage of that and it's huge, but we're starting to see companies that will take zero leasing fee. There's a company in Ohio that has zero leasing fee, and that's their thing. That's their tagline. That's their niche. Peter Loham, if you want to look him up, he does amazing things. But yeah, you don't have to have a management fee. And I think the more that you start bringing those other fees, the more you can bring down the client fee. And that's actually one thing that you get a 0.1% pushback on from clients is, I don't want you to charge my residents. No, there's somebody will get mad for that. And you wonder why, because you vetted this person, they have all the right stuff, and then you put them in the property and they willingly pay this fee, and then somebody gets mad about it. And you're like, but if I do this, I don't have to charge you a releasing fee, because I'm getting $20 month over month for X years, which covers your whatever X price fee, 3-digit fee for your releasing fee. So the more doors you have and the more residents you have and the more fees you have in place for the residents, the better off you can serve your client at a lower rate.
Probably a lot of fixed mindset goes into that, of deciding things based on things that don't matter, but that's just what they're accustomed to, and they just continue to do it that way.
Yeah.
That's usually what we see. Is there's not always a rhyme or reason for why people do things. just because I always did it that way. That's my parents used
Yes.
to say. Why'd you do it that way? Because we always did it that way. So okay.
We never thought to do it any different. It worked.
Yeah, what was somebody was telling me a story about they had this, like, I don't know, it was a meatloaf. They made this meatloaf, but it was like a topless meatloaf, so like cut the
Yeah.
top off, and it was just a thing in their family, and nobody understood why. Like, this is the most ridiculous thing. And come to find out, like 2 generations ago, the reason it started is because you couldn't fit it in the oven. So they had to cut the top off to fit it in the oven. So then it just started. It's like, that's what everybody did. And they didn't understand why they were doing it. They're like, oh, it's topless meatloaf.
Oh, that's awesome.
So yeah, it was just really hilarious. But I think that we see a lot of that just just in all aspects of life. Is just just kind of getting people to think differently, and they have to start thinking. So it's nobody wants to do that.
Yeah, and it's no one likes other people's ideas being forced on them. So the aversion of change, totally. Yeah.
We just had an election. We just had a full few months of that.
People are still reeling.
I know they will be, no matter what the outcome, they still will be.
Hmm.
Um, so, all right, cool. So any kind of final thoughts you can leave our listeners with of, how people should be thinking about property management, whether they do it themselves or use a company like yours, or just kind of things they should watch out for?
There's companies out there, you just got to pick up the phone and give them a call. Unfortunately, you hear a lot about management companies not answering the phone, but if you can get somebody on the phone and get them to share their management agreement and their lease with you, and get a couple in the market and compare those leases, draw out the equations, because it's math, and figure out if they're going to be the right person for you, and see if they're willing to protect you by them sticking to their systems and processes that they've, time tested. Having hundreds of properties in 10 years, 20 years experience, like that's a lot of reps to practice something. That's a lot of tweaks. That's a lot of fixes and upgrades. So it's nice to have that team. It's nice to have, CPAs in your corner doing your books. It's nice to have a lawyer doing the evictions and going to court for you. And it's nice not have to manage your team and constantly find people to fill those spots. And that's what a property manager can do, is they can take care of all of those things, all the moving pieces. So you don't have to focus on that garbage, because it is overwhelming and it can be a nightmare.
Yeah, the ideal world, having a passive investment actually be passive.
Yes. I mean, Buffett doesn't do real estate for a reason.
Yeah, it's certainly yeah, it's certainly complex, but Jen, I really appreciate you kind of sharing your wisdom with us. I know this is an area that I constantly hear about from people, and just wanted to kind of share your wisdom with our listeners. So, Janet, maybe you can tell us a little bit more about where people can find more about you.
Sure. oaktrustproperties.com. You can hop on our page, check it out. We're on LinkedIn, we're on Facebook, all the places. You can give us a call, shoot us an email, and we're happy to answer any questions, happy to send you comps, happy to help. We don't always have to be the right fit, but we're happy to help point you in the right direction.
Great. Well, thanks again for joining us.
Absolutely. Thanks for having me. Appreciate it.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist, because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Janet. Really appreciate her coming on the show and sharing her wisdom with us about property management. I know this is one of those topics that is just a constant thorn in my side, and pretty much everybody else I know is a real estate investor. So glad she could bring some perspective and some insight into the space. So this week we on our panel we have our very own Megan Gorman. Hey, Megan.
Hey, Kirk, how you doing today?
Good. It's just you and me once again.
Just us. That's okay. We'll keep it interesting.
Yeah, we'll keep it fresh and exciting for all the listeners. So, Megan, what were some of your kind of takeaways from the interview?
Well, first of all, I love real estate. And it's so funny. My clients know it too. They sort of poke fun at me at times about it. But I think real estate is one of those really fascinating asset classes because it's tangible. And, I feel like people can feel more in control when they have it. And, it's an interesting asset class in the sense with like rental real estate in a market like this, it's a good hedge against inflation. So it brings a lot of things that people like. And by the way, there's cash flow, right? So it has a lot of the elements that really attract investors into what they're really interested in. And so it's funny because I can have a client's portfolio do incredibly well, but if they hold real estate and that real estate's done well, that's their favorite portion. It really truly is. And I'm sure you see the same thing.
Yeah, I'm a big fan of real estate. I mean, it's funny because it's in many ways it's one of the best asset classes. You don't find, maybe there's another one, maybe oil and gas is similar, but you just don't get asset classes that have so many benefits, both from a tax perspective, from a cash flow, from appreciation. You just have all these different aspects of real estate that make a whole lot of sense. Now, granted, it makes a whole lot of sense in inflation, when we have inflation, and ideally kind of low to consistent inflation, but it tends to have some benefits there. Deflation is actually a problem, but overall, I mean, you can't go wrong with real estate over the last 100 years. It's just done great for both wealth preservation, inflation, hedge, cash flow. I mean, there's reasons that people have, billions of real estate investments because it's just, you got people that don't invest in anything else because why would you? It's
Right.
If you're really good at real estate, why invest in tech companies? It just doesn't make any sense. You don't get the same benefit.
Well, and by the way, I think we're going to see more people invest in real estate because with interest rates going up, right? The property market sort of, isn't trending like it did a year ago. I think there are a lot of people who are holding very low interest debt, right? They're waiting for the property market to return in their area. And they're saying, look, there's a need for rentals because we are still 5 million housing units short across this country, right? And it's pretty easy to rent. So they can hold on to their property and wait for that moment to sell and really get their mortgage paid for. And so this is a trend I think we're going to see more and more of across the country. I also think, from a personal note, I got a rental this year. You know what I mean? It was a year ago right now that I was negotiating the purchase of a property. And I remember at the time my husband thought I was nuts. And in past few weeks, he's looked at me and said, okay, first of all, it's worked out. And you were smart to do it when you did it, because I was able to lock in a mortgage, 30-year fixed at 2.875, right? Today, obviously 30-year fixed are north of 5.5%. And so that ultimately has helped make my initial year being a landlord, come out of the gate quite strong. Now, my rental property is a little different than most rental properties because it is at the Jersey Shore. And so for any of our listeners in the Philadelphia, New York, New Jersey area, they know it's a seasonal resort town type of rental property where you own the property, it's a furnished property, and you're renting it for a week rental to people coming on vacation. And so I have found that it has been profitable. I won't turn a profit this year because I had to buy a lot of furniture to furnish the house. But I also can say it is time consuming. The management of it takes a lot of time. And so it comes back to something that I know we talk about a lot, Kirk, which is you need to know who you are as an investor. And I think that's very true when you own rental property, which is you need to know the area that you own the property in incredibly well. And I own my property in my hometown. My mom's house is up the street. I got a lot of people there on the ground who can help me. And I know how things work there. And I know how that real estate market works. And that makes a big difference. So I say this because if you are considering owning rental property, really think about, do you know the area well? Do you know the rhythms of the area? Because that's going to be key in helping you make it a success.
Yeah, but Megan, I keep hearing how real estate's a passive investment. It sounds like it's more active than that.
Oh, yeah. It's so funny. The IRS is tricky on this because, if you ask me, Saturdays is changeover day in the town that I own my rental property. And Saturday mornings I get up and I am like always worried because things can go wrong. And you spend a lot of time in your rental property. But here's the thing. The IRS is sort of like, look, here's the deal. For you to actively engage in real estate, you have to spend 750 hours a year in the pursuit of real estate. And that breaks down to about 14 and a half hours a week. So if you ask me about my rental property, did I spend 750 hours a year doing it? well, I might have thought about it 750 hours, and I might have, thought about 14 and a half hours a week, but it probably is taking me an hour or two a week during the height of the summer season. So I am not going to qualify as an active real estate investor. And so this is a really important point, Kirk, that you bring up, because I'm a passive real estate investor. So I'm going to take in rents. I'm going to offset my rents by income, my mortgage, my insurance, the repairs I do when I have to call the plumber. I always leave a nice little bottle of Prosecco out for my renters when they come in, things like that. So those are expenses. And then I have depreciation. Now, remember, you don't depreciate the land, you depreciate the structure. And so and you also, in my case, depreciate the furniture in the house. And so the depreciation mixed with the expenses will often offset all of the income. And in fact, from a tax standpoint, you are running at a loss. And Kirk brought up the right term. It is a passive loss. Because if I run at, let's say, a $10,000 loss, I can't take that $10,000 and put it on the front of my 1040. Instead, I have to let it carry over to future years when I potentially may have income to offset it. And that is because I'm not an active real estate participant. Last thing I'll say is, if I was, I could actively take that $10,000, right? So being a real estate participant can have some real tax value to it. The value to me about my rental property is ultimately my rental property, when the way I've built out the model, will throw off a tax-free income stream to me. And that's really nice, because right now I'm in a partnership, so I pay ordinary income tax on a lot of things.
Nice. So you kind of mentioned this, and I just wanted to put a finer point on it because I think it's important. You threw out active versus passive investors. In general, is it something that people should aspire to be an active investor as opposed to passive? Because, how does that affect people's, I know it's variance based on the person, but in general, like, is it better to be an active investor?
It comes down to strategy, right? So for a lot of people who own rental property, they're like me. They have a day job, right? They don't have time to become an active participant. But let me tell you about a friend of mine. She had a successful career in tech. And when she had her daughter, she didn't want to do the job she did before because it was a lot of travel, all the childcare issues, and she's always loved real estate. And so she has spent the past 5 years buying properties all around the west and the southern part of the country. I mean, she owns a number of properties in double digits, and this is her job. Like, she gets up in the morning and she's working on it. She is an active participant in real estate. And I think it's brilliant. It's a wonderful strategy, and it's a dual income household, right? So her husband's making the ordinary income coming in the door. She's running all these properties. They're cash flow positive. And when there are losses, she's able to use her losses to offset his ordinary income. So it's a great tax savings. And so those are the stories that I think are really inspirational in terms of, becoming an active participant in real estate. But for most of us, we're not going to meet that definition, and that's okay, because there are still benefits to being a passive investor in real estate.
Yeah, I think that comes out to about 14 to 15 hours a week that you'd have to be doing real estate in order to consider it active, which to me seems like a lot, but I guess depends on your properties and how many you have, right?
So, one person we often have on our show is Mindy from Bigger Pockets, who has been incredibly successful in real estate and leads that show. And I really think that the people who down that path, I have a lot of respect for, because building these portfolios take time. You have to be good at spreadsheets and numbers and looking at it and making sure you are getting return on your invested capital. And I think it's going to get harder, because if I had tried to buy my rental property this year and I had to get a mortgage at 5.5%, 6%, my profit margin would have been cut. And so I think what's going to happen is, we're going to see people be, if they already own the property and they already have a low cost mortgage, they'll continue to be successful. I think for others who have to go out and get, loans at this rate, it's going to be harder to make real estate profitable. And so what I would tell anyone who wants to get into it is, make sure you have a model that you built out, right? On income, expenses, depreciation, return on invested capital. Understand what you're trying to achieve here. Because as Kirk, you and I know, the crazy thing about this market, which wasn't true before, is one of the reasons people liked rental properties was a way to get yield. But today we're sitting here and you can get yield on cash. You can get yield in the fixed income market. And for those who can't do rental properties, you can invest in funds that invest in private real estate. And there are a lot of great private real estate funds out there that when they're receiving income back, they aren't taxed at ordinary dividend rates. They're actually seen as return of principal, which means they are tax-free. So there's a lot of other alternatives out there for those people who can't get in the rental market because, mortgage rates have gone up and they're looking for that type of yield.
So I know we got to wrap it up here, Megan, but I wanted to ask you, because you're now a rental property owner, and what are your opinions about property managers? Do you think it makes sense to get one? Should you do it yourself?
Yeah, it's okay. So I think it's important to think through that as a strategic decision. Property management comes with a cost, but what are you solving for, right? I have people with, very large houses, like these multifamily vacation homes in places like Park City and Bend, where they can't do the day-to-day, and having a property manager on the ground who's taking a cut makes sense. When we work with those property managers, what I like about them is they run the P&L for us. It's great. When it's tax time, gets sent to my inbox. It's very easy for me to input into Schedule E. It's the no drama, right? So there's a lot of value to property management. In my case, I'll give you an example. I don't have a property manager per se. I do have a company in my hometown that checks on the house. If there's an issue, they come over and fix things, right? But their property management fee is very, very, it's cost effective because of where they are and what they do. So really think through and run it through your model, because again, the ultimate point in this is they're supposed to save you time to help you make money. And you want someone who's going to do a great job. And I will tell you, I hear from clients mixed feedback on property managers. And often what will happen is they'll work with a property manager for a couple of years, and then they have to RFP it out again.
Yeah.
And so it's really, it takes time to find someone really, really good.
It is hard finding a good property manager. That is the number one complaint I hear from real estate investors, and why a lot of them do property management themselves. Outside of the fact that real estate investors tend to be, squeezing nickels. I mean, they every
part of the game.
Yeah, I mean, you have to, but I don't mean to knock them. It's part of the game, like you said. But I also think that it's really hard to find good property managers. So if you find one, great, let us know, because they're really hard to find, and especially when your area, which is even harder. So, Megan, where can people find more about you?
Yeah, so you can find me at Forbes.com/Megan Gorman, and feel free to reach out with any questions. And Kirk, thanks for having me on.
Thanks for coming on, Megan. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do. So invest in your life.